if you look at the opening price at midnight local time, New York midnight local time, that's what this here is. That's that opening price. This price is useful for trading the London session. That's 2 o'clock and 5 o'clock in the morning, New York local time. And it helps me frame the power 3 for the daily range. If I'm bearish, I'm looking for something to rally above that opening price in London. That's my ideal scenario. I'm looking for that personally. As you can see, we really didn't get much of that today. It was extremely heavy and just wilted and went lower. Sometimes that's going to happen, folks. And in this instance, I missed a setup. I don't get in what I'm thinking I'm expecting to see. So I'm human. You're human. You're going to look at something in the chart and you're going to have something that is your favorite model, whatever pattern it is that you're looking for. And it may not even be my stuff. You know, say you're just here casually watching. You're probably nodding your head saying, yeah, I've had lots of instances where I was looking for my particular setup and it didn't materialize and it went the other way without me. You're going to miss moves. You're going to misinterpret it. You're going to read it wrong. That's going to happen. That's why you have to use a stop loss. That's why you have to be controlled about how many times you go into the marketplace. And you also have to have some measure of flexibility. And that comes with experience. You're not going to always be able to see that this isn't going to go up for you initially. It's just going to just wilt and go the other direction. So for those of you that are trying to learn these concepts, these types of movements are going to be very frustrating in the early stages of your development because you're going to feel like they're changing something. They're aware of this. This stuff goes on a lot. It happens in the futures markets, like commodities like corn, soybeans, gold, oil, stocks. Sometimes the markets are just simply too heavy and they're not going to rally for you, okay, to short into. It doesn't mean that they've changed anything. It doesn't mean that the concepts don't work. It just means that this is a market that is extremely bearish. And when it's extremely bearish, you have to trade it differently. Midnight, New York time, that opening price, I use that to trade the London open session. That's 2 o'clock to 5 o'clock in the morning. And also to help frame the idea, like say I sleep through London, which is 90% of the time what I do today. Like I don't do a lot of London session trading. And because of that, when I wake up and I'm looking at the market around 7 o'clock in the morning or so, I'm looking at what has happened overnight. And did we create a scenario that I would be looking to trade if I was awake during London? If it happens, then I know that I'm really built in with an advantage on the daily bias, because if I'm bearish and it creates a rally above the opening price, midnight time, New York, and it creates that rally, that little Judas swing that I've explained many times already, and it starts to decline and I'm below that around 7 o'clock in the morning, I know that I'm likely to create another little short-term rally, but it would be above, ideally above the opening price at 8:30. But it may not do that. And price just remained heavy below both opening prices at midnight New York local time and 8:30 New York local time. So everything was extremely bearish, and it was just so heavy it could not mount any meaningful rallies. Many times in my early development, I got crushed on days like this, where it felt like, okay, it's too low now. It can't just keep going lower. So I'm going to try to buy it now because, indicators told me that we're oversold. 1992, 1993, 1994, I blew account after account after account doing that. And it's frustrating. Now, obviously, with 3 decades of experience behind me, I know what it's trying to do and where it's trying to get to. And it's getting there in a really fast rate of speed. Now, obviously, you can get there a lot faster than that, but I don't want it to do that because it gives no real opportunity for me to engage and participate in. And it doesn't give you, as the student, to engage also with your demo or paper trading account to practice. But as real life sometimes is, it's unfair. Okay, it doesn't give us what we want. Sometimes our expectations and our wants are denied. And in today's climate, that is not popular. That's why this market and trading these markets is very, very difficult, especially for like the millennials. Okay. That ideal, perfect, always come exactly as I expected, sometimes is denied. And either you accept that and navigate the markets with imperfection and without the ideal scenario for your model, or you're comfortable with just letting go and not doing anything and being accepting when it comes to big moves and you can't participate in it. There's lots of moves, folks, over the last 30 years that I missed that were huge, big, huge moves. For instance, Bitcoin. I called that thing. I called that thing at 7,500 to 20,000. And then right before 20,000, I said it wasn't going to 20,000. It was 19,700. And I said it's going to go to 6,000. And everybody laughed and went down. And I said I was going to go down to 3,000, but it went down to like 32. And then I think a couple times I had it wrong publicly. And then I said that we would go to 20,000 by Christmas. I think it was 2020. And then I said 30,000 by New Year's, and I was off by about 18 hours. It went to 30,000 on the 2nd, I believe it was, on January 2021. And then I said 55,000 and 66,000. That was about as far as I could see it go. And we went just a little bit above 66,000 and hasn't been doing much since. But I didn't do anything with that, with real money. So I missed a huge run in something that would have otherwise paid out a lot of money. And I've missed a lot of moves in the futures markets and a lot of commodities. I missed a lot of stock moves, while I was teaching Forex. There's a lot of stock movement in index futures that I didn't participate in. Guess what? It's okay. I'm able to still find trades. I'm not starving. And that's the reality. You're going to have to come to terms and the grip with you have no way of participating in every single move. And don't think that you're going to find every big move. You're not going to participate in every single price swing. You're not going to, folks. I miss moves. You're going to miss moves. And it's okay. It's part of this game. This business is going to still run and do the same things we're looking for all the time. And you're not going to participate in every move. Okay? So give yourself the permission, okay, to be human. You're going to do it wrong sometimes. You're going to see it for something it's not, and you're going to miss that big move. I had a little piece of this today, but I didn't get the whole thing. I wish I would have, but I didn't. And it's okay. I forgive myself for being a good husband, taking my wife to the airport. I know this is all too much stuff and you don't care. Some of you like to say those things in the comments. Get to the point. The point is, you do this, you're going to have these elements creep in. And how are you going to deal with it? You're going to get mad and go on social media and blurt out and curse and say these markets suck. No, that's not what you should be doing. You should just reason with yourself ahead of time. Say, okay, I'm not going to be able to do everything. I'm not going to participate in every single move. And this is what happens sometimes. It doesn't mean the model's broken. I promise you, over the next couple of weeks, you're going to see the model delivering like it's done in the past. And it's fine. There's going to be times when the market shifts in and out and the market structure is just too overwhelmingly bullish or too overwhelmingly bearish. In this instance, the bearishness I gave you guys just was a lot more bearish than the model would permit for entry. But you can see there's fair value gaps in here you can use to participate. And these are just simple little imbalances to get in sync with what is already in motion. Not needing to see it rally above the 830 opening price because it's not likely to. So it takes a little bit of courage to get in here and trade these types of setups. But that's what you do. Or you don't do anything and you just tape read. You watch it when it does it and say, okay, I would like to see it drop here. And does it drop? Yes. And you study that. And it gives you another fair value gap in here that's not highlighted, and it rallies up to a bearish order block and sells off. And your stop is above here. And just because it goes down lower doesn't mean jam your stop loss to here, because that's what happens. You need to have time and price behind you before you start moving your stop loss.